few quick thoughts on today's session before inflation tomorrow. Looks like that will be the highlight for the week. In terms of economic data, we've been responsive from consumer confidence earlier in the week to the reaction to jobless claims today. Still, though, something hasn't quite added up. We haven't gotten the animal spirits. We still have seen faded moves when we attempt to get these everything rallies, but we are moving in the right direction, and the momentum's starting to build. I wrote this week about the potential for breakout to turn into melt up. I think that still is generally the way we want to think about it. More risk on than off, for sure, no question about it. A few things today that were noteworthy chart-wise. Bitcoin number one, I've had the red light on crypto. We need to get the close above the August high. We got the intraday test of that August high, but BTC slowed down a little bit before the close, didn't finish above that level. Red light holds, downtrend still. Let's get it above, let's get it to close at 65 or above for BTC, then we put the yellow light back on. Bonds and tech have an interesting relationship, and this is still going to be pivotal going forward. I've made the case here that rising yields is what you want to root for. Since the Fed cut rates last week, we've seen the reaction by the Treasury market, bear steepening, yields going higher. Now, we've had a little bit of pushback around the 3.8, but we continue to make higher highs in the yield, and that's really good. We did see a little pushback. We saw some bond buyers come in today, but the fact that the 10-year continues to trend upward, we've got the higher lows and we've got the higher highs. This is a positive message about the economy. Now, the bond story, though, when you're at these levels that are still so low compared to the highs of the past year for yield, stocks should be able to absorb these higher yields. Stocks should be able to embrace the message of an improving economy thanks to help from the Federal Reserve and the interest rate cuts. Throw in a little China interest rate cuts too, and suddenly you've got a nice little cocktail for risk on. I think that's generally what we're getting. So what I said yesterday about the China trade holds too. In fact, crude oil dropping off today is really important to the point I was discussing yesterday. The only real blowback risk of China's economy getting back online is that there's a sudden surge in commodities and basic goods that are an input for inflation. But right now, with crude oil getting pumped like crazy around the world from here, and the Saudis too now wanting to take back their lost market share, that's a very positive thing for the inflation story. So generally, things are going our way macro-wise. Tomorrow, we want to see the response to inflation continue the trend here. It might sound weird to say that you want yields to go up as inflation data arrives, but I still believe that's the case. If you do get a big rally in bonds, we've seen that stocks have been a little bit more jittery around those moments. Last thing, finally, the reason why the green light on stocks is still there and holds and it looks stronger today is because we did get a solid move in semiconductors. The super micro thing, I'm a little bit worried about. I'm fine to admit, but at this point, let's just assume it's not going to disrupt everything we've already heard about all the AI build out, etc. Chips in the SMH, the ETF there, tracking the semiconductors, making the higher high. It's been lagging. That's a really important move. Let's get that follow through tomorrow. And then I think really your chance of a big frothy rally increase. The China story, amazing though. Look at the K-Web chart. That's incredible. But the fact that we still got strength in our own market today alongside the Chinese markets suggests that money doesn't have to pick a path, that perhaps both can be home for investors seeking risk appetite. As long as there's no big shock for inflation tomorrow, seems like we're on a decent track. Let's hope bonds keep selling off and the message about the economy continues to be positive. Have a great night.